Let me now bring on board Devin Choksey, Managing Director of Choksey Securities. Devin, good morning. Thank you for joining us. Devin, let's start with the big story. And the big story yesterday was NHPC. The stock cracked and collapsed by about 20% plus. Why and who sold?
Yes, Nikunj, good morning. Well, I think who sold, probably I think the answer would be available with some of the custodians, as I believe that I think this is the resultant outcome of the OFS kind of a pricing mechanism. Understanding is that I think OFS would come out for NHPC at a price substantially lower than the previously quoted price last week. I think that's where I think the market cracked yesterday in the early morning hours itself. A large chunk of shares were sold, and reliably I think from the institution players. So from that point of view, I think one can easily argue that they probably got the wind out of the kind of evaluation at which NHPC is getting marketed in the OFS route, which apparently I think is suggesting that 16 or 17 rupees per share kind of a price would be the price at which I think the stock would be marketed. According to me, I think the OFS in the PSUs are basically I think the weapons of mass destruction, as I call it, because already existing listed companies on which I think you come out with the subsequent offering at a lower price, which means in turn you are giving the punishment to the existing shareholders who have invested into these companies. And that's where I think the change in the route is required to be taken up. If this is the way in which the money is taken out of the system, and probably if the investors are told that okay, your valuations will come down, to my mind, I think the people will not come into this market, and that's where I think some serious deliberations are required in on this particular subject. According to me, NHPC has clearly, and along with that, I think why only NHPC, I think earlier issues also I think have resulted into a lower price offering compared to the market price, which has really created I think the destruction into the price, and that's where I think one needs to look at it. According to me, the fundamentals of the companies haven't changed. The company is still quoting at EV per megawatt of around 17 rupees per share, which is not at all expensive compared to I think 5,500 megawatts of capacity that NHPC holds. So I would not attribute this fall to any fundamental weakness. According to me, I think it's a market technical weakness which is basically leading to such kind of massive fall into the PSU OFS, due to PSU OFS.
Devin, hi, morning. Would you say it would be the same problem, the technical selling for names like an IFCI or for that matter SR Oil and Orbit as well that we saw yesterday?
Well, I don't know about all other stocks honestly, I think, but I definitely feel that I think some of the public sector undertaking companies are the victim of this particular OFS mechanism which the market has adopted. And I repeatedly say that I think this is not the way in which I think you should be selling your existing listed stocks. If you want to sell existing listed stocks, I think the way in which it should be sold is like I think similar to a buyback arrangement, wherein you keep the window open for a longer period of time and allow the investors to come and buy those stocks at an appropriate point of time when the valuation permits. Here in a shorter span of time, I think you want to sell everything, and as a result of which I think it results into the price destruction, and that's where I think the more amount of thinking, more amount of deliberation is required, and this kind of carnage must be stopped, otherwise investors will lose confidence in the system.
Let's understand the importance of liquidity. On a YTD basis, benchmark indices are down by about 3.5%. But if I map the global liquidity on a net basis, on an absolute basis, foreign institutional investors are still net buyers. So who's selling this market down?
It's a big question, Nikunj. I think if you look at the internals of the market, you find that some of the mid-cap stocks have been badly sold by some of the financiers, the typical NBFCs who lend money against the promoters holding. So they have basically sold these stocks, and that has created the collateral damage also to a greater extent within the portfolio of some of the investors who had to perforce sell. Take a case of core education. I think the way in which the stock fell, I think that necessitated the kind of a sale trigger from other stocks that they were holding where they were making profit. So it ultimately brought the problem, and it compounded the problem actually into the market. So on one side, the mid caps have been sold by the likes of financiers who have been basically wanting to collect their collaterals at the end of the year for the payment that they need to collect for the lending that they had done to the promoters. On the other side, I think some of the heavyweights have been sold in the market by the likes of once again the traders who have been basically pegging their portfolio with the kind of fluctuations which are happening into the currency. Now out here the rupee has depreciated to 55 and below, so as a result of which they were perforce required to set the algorithm and set the kind of sale orders into some of the large cap stocks, as a result of which you see the fall in case of companies like Reliance, ONGC. Despite of no fundamental weakness, I think some of these technicals have forced this counters to go down, and that is weighing down on the index as well. So if you look at the market, I think this is giving the complete picture as to where the mid cap and the large caps have fallen in this market.
Devin, what to your mind explains the weakness that we've been seeing with the cement pack?
Well, I think twofold issues as I see it. One, definitely I think the weakness is on the part of the companies to increase their production, and as a result of it the capacity utilization is not coming up. I think as we see it in the last quarter, I think the capacity utilization stayed between 82 to 87% only for respective companies. Till the time I think the volume picks up, I think the companies would struggle around this price. That is the first point, and that's a problem also because these companies are quoting at a higher valuation. Second problem is definitely about the prices. I think the prices are not increasing into the market even though the input cost is not under control because of the want of demand as far as I think cement manufacturers are concerned. So to my mind, I think higher valuations cannot sustain for cement companies if the volume growth is not happening or a price growth is not happening. To my mind, price growth will probably take longer time to happen, and I think the volume growth may have happened, but the kind of infrastructure projects which are required to get rolled out, that's not simply happening, and that visibility is not coming for at least next 1 or 2 quarters. So definitely I think as a result of which you are seeing a pressure on the cement prices, wherein the traders who earlier booked the positions on the long side have definitely started booking the profits and going short also at the same time in some of the cement counters which are quoting at a higher valuations.
Energy stocks, HPCL, BPCL, Reliance, they are underperforming Indian markets, even though one is hoping that we will soon have a sound energy policy in place. Why are these stocks not going anywhere?
I don't know, Nikunj. I think this is a question which, at least particularly for the upstream companies like Reliance and ONGC, I am relatively very bullish. I believe that I think both these companies are in for I think good times going forward. Gas price revision is the first point. At the same time, higher amount of realization coming in, particularly for a company like ONGC due to the reduction into the subsidies and the prospects therein. According to me, I think they are going underpriced. I'm not too confident about the refining companies, the marketing companies, more because of the kind of pressures from the top and the bottom which continues to I think trouble them every now and then. So as a result of which I think my larger confidence stays with the upstream companies, and I fully agree by the point that I think both Reliance and ONGC, they are available at a valuation which are quite compelling. Reliance is available at a PE of around 12 and ONGC is available at PE of around 8.5, 9. So according to me, I think these two companies for sure I think should be added into the portfolio in a falling market. Maybe the weakness in these two counters is largely due to the market technicals, where the portfolio weight is being readjusted due to the currency fluctuation, which I explained earlier. That is the reason for which these stocks are becoming victim in the market. But that could be a buy opportunity for people who even want to trade for 3 to 6 months into these counters.
Devin, at 340, 350, it was a resounding buy for you. That is Ken India. What's the call on the stock now?
Once again, I think the same story applies. The company is not fundamentally weak. On the contrary, I think the fundamentals are even becoming stronger. Okay, once Sri Lanka discovery is not happening, that doesn't mean that the volume growth of the Indian fields I think is not going to help the company. It's definitely I think going to work better for the company going forward with the production going up as far as the Mangla and Aishwarya fields concerned. So to a greater extent, I would feel that I think Ken Energy or Ken India is definitely I think a buy opportunity at lower levels and can be added into the portfolio.
Devin Choksey, appreciate your time and thank you for your valuable thoughts.